If you're over 60 and you use an ATM, a debit card, or you've ever gotten a phone call from someone claiming to be your bank, there's something the FBI confirmed recently that you need to hear. Last year, scammers stole $388 million from Americans through a single method, and adults over 60 accounted for roughly 3 out of every $4 lost. That's not a guess. That's federal fraud data, and the numbers are still climbing this year. Over the next few minutes, going to walk you through 5 specific warnings. 3 of them are backed by documented cases from just this year, and it'll give you the exact words to say if you ever find yourself caught in one of these situations. Before we get into it, I want to be clear about where this information comes from, because that matters more than anything else in a video like this. Everything here comes from 3 places: the FBI's Official Fraud Reporting Center, the American Bankers Association's Public Fraud Guidance, and state legislative records from this year. Anywhere a number comes up, you can look it up yourself. That's the only kind of authority worth trusting on a topic like this. Not going to ask you to believe a title. I'm going to show you where every number comes from. Here's the pattern banks are seeing over and over right now. It's not the scams that look obviously fake anymore. Those are getting rarer. It's the ones that look exactly like a normal ATM transaction or a normal phone call from someone who already knows your name, your bank, and sometimes even the last few digits of your account. And there's a reason seniors get hit hardest by this, and it isn't carelessness. It's that these schemes are specifically built around 2 things older adults are more likely to have: cash reserves built up over decades, and a lifetime habit of trusting people who sound official and calm. 2 patterns show up again and again this year. The first is low tech. Physical devices installed inside real atoms sitting right where your cash comes out. The second is high-tech, a single phone call that can end with someone's entire life savings converted into cryptocurrency in under an hour. Let me show you what happens when someone doesn't know the protocol, compared to what happens when they do. Same person, same situation, 1 different decision. Meet Frank. He's 74. A retired mechanic. Back in March, Frank went to withdraw $200 from an ATM near his home. The screen said the transaction was complete. No cash came out. Frank assumed the machine was broken. When he drove home planning to call his bank later that evening. 3 months later, Frank got a phone call from someone claiming to be a fraud investigator at his own bank. They told him his account had been compromised, and the only way to protect his savings was to withdraw the full balance in cash and deposit it into a Bitcoin ATM at a nearby gas station. Frank was already a little on edge from the earlier ATM incident, and that lingering stress is exactly what made the second call land harder than it should have. Here's where Frank's story splits into 2 completely different outcomes, and each one comes down to a single decision made in the moment. Let's start with the ATM. Frank left the machine and called the bank the next day. By then, whoever installed the device had already come back and retrieved the cash. This is a real, documented pattern, not a rumor. Philadelphia police reported at least 9 of these so-called trapdoor cases starting in mid-March this year, and they publicly warned the method would likely spread to other cities. Once you leave the machine, the transaction record still shows that cash was dispensed. Banks can investigate, but the odds of recovery drop sharply the moment you're no longer standing there. In case after case, victims who walked away first recovered nothing at all. Now here's the same scenario done correctly. If Frank had stayed at the machine and called his bank's fraud line immediately. Right there on the spot, the timestamp, his physical presence, and the immediate report all combine to create a paper trail the bank can act on fast. This is the one behavior that decides whether this scheme works or fails. The device only succeeds if you leave before you report it. Stay at the machine. Call from that spot. Don't walk away and call later, no matter how embarrassed or confused you feel. Now the second scenario, the crypto ATM call, and this is where the FBIS numbers matter most. Remember, adults 60 and older accounted for roughly 76% of all reported dollar losses in these kiosk scams last year alone. If Frank withdraws his savings and feeds the cash into that machine, the transaction is gone within minutes. It can't be recalled the way a wire transfer sometimes can. It can't be frozen the way a card charge sometimes can. Once the cash goes in, it is gone permanently with almost no path to get it back. Here's the same call handled correctly. Frank has something called a trusted contact on file with his bank. It's a simple designation that takes about 10 minutes to set up, and it gives that person 0 access to his money, 0 ability to move funds or make decisions. All it does is give the bank someone to call if their fraud monitoring flags something unusual. In this version, the bank notices the sudden large withdrawal, calls Frank's trusted contact. The scam gets stopped before the cash ever leaves the building. This exact kind of intervention is why banks are now training tellers to ask direct questions about large cash withdrawals. Well, not because they are being nosy, but because in many documented cases this year, the victim was still on the phone with the scammer while standing right there at the teller window, being coached in real time on what to say. Two decisions, two completely different outcomes, and underneath both of them is the same rule. The moment feels urgent because that's the design, not because it's actually true. A few more things worth knowing that most videos on this topic skip over completely. First, if you do get caught by a crypto kiosk scam, your refund rights depend heavily on your state and on how fast you act. Indiana banned these machines outright starting in March this year. Tennessee and Minnesota followed with their own bans that same spring. Other states, including Florida and North Carolina, chose regulation instead of an outright ban, which usually means daily transaction limits and a refund window if you report quickly, sometimes as short as 2 weeks. Around 30 states introduced legislation on this in total this year. Ask your own state attorney general's office what your specific refund window actually is, because it genuinely isn't the same everywhere. And assuming it matches what you heard somewhere else could cost you the window entirely. Second, no legitimate bank employee should ever need to physically hold your phone to help you. And no legitimate employee should be watching you enter your PIN. If either of those things happens, asking for a manager isn't rude and it isn't overreacting. It's a completely normal request. And how someone responds to it tells you almost everything you need to know about whether to continue. Third, a real government agency will never instruct you to move money into cryptocurrency, gift cards, or any payment method that can't be reversed. Not the IRS, not the Social Security Administration, not local police, even if they claim it's to protect you from a warrant. If a phone call includes that instruction, the call itself is the fraud, no matter how much the caller already seems to know about you, and no matter how official they sound. Fourth, these scams are increasingly starting by text message now, not just phone calls. A message claiming to be from your bank's fraud department, with a link to click or a number to call back, is exactly as dangerous as the phone version. Never click the link. Call the number printed on the back of your actual card instead. So here are 3 things to do this week, in order. Starting with the one that takes the least effort and matters the most. 1. Call your bank and ask specifically whether they offer a trusted contact designation. Most major banks do. It costs nothing, takes about 10 minutes over the phone or in a branch, and gives that person zero access to your funds. All it does is give the bank someone to reach out to if something unusual shows up on your account. 2. Memorize one simple rule for ATS and repeat it to yourself now so it's already in your memory before you need it. If the cash doesn't come out, stay right where you are and call your bank from that exact spot. Don't walk away and call later. Staying is the entire difference between recovering your money and losing it for good. 3. Tell one family member right now this exact sentence. No government agency will ever tell me to put money into a Bitcoin ATM. If I ever say someone told me to do that, stop me and ask questions first. Saying it out loud before you're under pressure makes it far easier to remember in the exact moment you actually need it, when your judgment is under the most stress. If this walkthrough left you feeling more prepared instead of more scared, that was the whole point of making it. I break down a documented fraud case like this one every week, and I source it the same way every single time. Real data, real citations. Nothing invented, nothing exaggerated for effect. If that's useful to you, stick around for the next one and let me know in the comments which of these 5 warnings surprised you the most. I read every comment myself.